All right, so today, wait, is everyone here? First of all, we have enough. Everyone who replied yes is here. I'm gonna record this last lesson for the next. I mean, it's kind of late. It's also Friday night, so I understand. But you getting what you put out. Firm believer in that. So good for you guys for showing up.
Yeah.
You guys can see my screen, right? I mean,
Yep.
I'm doing it, guys. I don't take days off. Like, if you think that you can take days off, then that's asinine, right? Like, I'm still here studying. I'm still here grinding. I've never stopped, and I won't stop because I don't want to lose my edge, and neither should you guys. Trust me, it only takes like a few years. If you really commit to this, you'll be better than everyone else. It really only takes like 1 year, and if you commit for 1 year, you'll be better than everyone else. And if you commit for more than 1 year, you're gonna be a fucking millionaire. So it's completely up to you, right? How you do that. But I'm not here to hold your hand. I'm here to make you a better trader. So let's talk about today's lesson, which is gonna be. We're just going to call these advanced PDA selection, whatever. That's going to be the name of all of these lessons. And today we're going to cover order blocks and breaker blocks. So there's a kind of a trend in like the ICT trading space, which is like becoming chart like pattern traders, okay? And that's the last thing I want you guys to do is become pattern traders. In the same way how we have different things, like different confluences regarding FVGs that make them higher or lower probability, right? We have different FVGs that frame breakaway gaps and inversions. We always want to be incorporating narrative and context into every PD array we select. So when we look at the PD array hierarchy or the hierarchy, if you want to call it, of PD arrays, right? You want to always understand this precedent and this kind of general logic. So first thing we consider is time. The second thing we consider is liquidity. And the third thing we consider is PD arrays. In that order. So by nature of that statement, right? I'm going to move this thing 1 second. No, that's not it. I want to get rid of that line. There we go. Okay. And also hide this thing that gives me this line so we can just have a clean chart. Okay, so in nature of this statement, right, we care about time, then liquidity, then PD arrays. While we are selecting our PD arrays, if we aren't considering these two before that, then what we're doing is we're choosing suboptimal PD arrays. And choosing suboptimal PD arrays means that you are becoming a pattern traders. Don't consider the above, the two things above. Right? Pattern traders are going to see every single order block as a potential entry and every single breaker as a potential entry in the same way they see every fair value gap as an entry. Why does this volume imbalance fail, guys? Right? Why do you guys think this volume imbalance here fails?
It's which one?
This gray one. Maybe I'll make it darker. Why does this volume imbalance right in here fail?
It's waiting for February Q2.
Yeah. So what is that? What does that have to align with? What's your argument? What's
that aligns with time.
right,
We're waiting
so-
for February Q2 of the year.
Sure, time. There's also,
Time.
right, liquidity resting above, not on NASDAQ, but on what? What has failed to make a higher high, right, on
Yes.
this monthly chart?
Yes.
So we have a massive SMT with ES that was just now today broken, right? And you can see that here, right? This is the all-time high on ES, and then NASDAQ's all-time highs are way, kind of back here, somewhere down here. Like if we go to a monthly chart on both, you'll see our all-time highs are here on NASDAQ. We'll put this in the gold, and we'll sync this into both. Okay. So here's our all-time high on NASDAQ, right? And here is our all-time high on ES. Finally, we have symmetry, and we don't have the SMT. So in this case, if you're a pattern trader, right, what are you failing to recognize about this imbalance? Well, first of all, time, like Yusuf said, right? Maybe we're waiting for a quarterly shift, and a quarterly shift is something I'm going to teach you guys in the IPTA look back, like lesson number 2 I'm going to do, which is going to be market cycles. Essentially, we're going to be looking at how to anchor your look back boxes and then where to consider quarterly shifts from. So realistically, every 3 months, there is a quarterly shift, right? Every 3 to 4 months. So you can see very clearly that November was the last quarterly shift, right here, right? So then in this look back, we can now project forward. If I do something like this, anchored, right? there's not go. Oops. Okay, cool. So what we want to be doing is looking at our current 60-day look back and then our current 60-day look forward. As you can see, we had a quarterly shift right here. And if this doesn't make any sense to you, it has nothing to do with the lesson, we'll do this eventually. So we want to project, the next 3 months out, which would be 90-ish days, and it can go longer than 90 days. It can go 4 months, whatever, 120 days. So we want to be looking for now some sort of quarterly shift, but maybe that won't happen until this SMT, which is time-based, right, and liquidity-based, has been run out. So maybe that's why this fair value gap fails, or this inefficiency. What else? Why else might this fail? Just from looking at the chart.
We moved from IRL to ERL.
Yeah, exactly, right? So we're not considering. So what aren't we considering there then?
Liquidity.
Yeah, mostly. Well, a fair value gap isn't just a price-based array, is it? What
No.
time frame am I looking at?
The daily.
So this is a time-based array, not just a price-based array, right?
Yeah.
So then you're failing to consider time and price again. When I say time and liquidity, that's the same thing as me saying time and price. Okay? Liquidity is just candles, right? Highs and lows, price. But you're failing to consider the internal dynamics of price delivery. You're simply looking at a pattern in the market, which is asinine. We don't do that. We don't trade patterns. We trade context. Maybe that's why it fails. What else? What other concept here I'm going to draw out could maybe be why it fails?
It's in discount.
Yeah, it's in discount, right? So then we have another. Now, what is that based on? Discount. What is that? Time or liquidity?
Discount is based on liquidity.
And time. How does this dealing range get created?
Over time, yeah.
Over time, right? So we're failing to neglect, or we're proceeding to neglect time and price again. So these are the concepts which always are rooted in time and price. That's why everything I teach you is time and price theory, because it's all related. Now this SMT is no longer there, so maybe now we have a thesis for shorts. No structure yet. Okay, so let's now apply this, just like we have with fair value gaps, to order blocks and breaker blocks. The first thing we want to do is we want to qualify what an A+ order block and an A+ breaker block are. And I've done this in individual lessons, but we're going to do it again. So can someone tell me what they think an order block is?
An A+ order block sweeps liquidity.
So an A+ order
And it
block.
has some sort of
Wait,
timer on it.
Let's just start with the definition of an order block.
Okay.
Someone give me the definition of an order block.
So is it? Well, if you sweep, so I think it's just a large block of orders, right? Is that basically what it is? Like some ring orders.
Yeah. Yeah. What does it look like on a chart?
If it's a bullish one, it's a down close candle. If it's bearish, it's up
Yeah.
close.
So it's the last up or down close candle or candles before an institutionally sponsored move higher, lower, or higher. Now, what does institutionally sponsored mean? I use that word very, very non-sparingly. So let's talk about that. It's a deliberate choice in using that word. What does that mean?
It's where smart money's getting in.
Sure. What does that look like in terms of a chart pattern?
Displacement?
Yes. Nice. Was that Willie?
Yeah.
Yeah, I like that word a lot, okay? You're going to hear me use it a lot. Displacement. Fantastic. If I ever say institutionally sponsored, let's now make that word tantamount or equivalent, sorry for the big words, to displacement, okay? Institutionally sponsored means displacement. What is another word for displacement?
Fair value gap?
Fantastic. There you go. An institutionally sponsored move will see displacement in the market and the creation of inefficiencies, i.e. fair value gaps. That is how we're going to define an order block. So someone say it all for me. What is an order block?
It's the last up close or down close candle before displacement out of a fair value gap.
Yeah, before a displacement out of a region, creating inefficiency, okay? Now, that is the very common understanding of a fair value gap. We are going to build on this concept, okay? Our A plus order block has 3 criteria. 4 make it A plus plus, okay? I'm going to go through these. I don't like how it's showing. I can just click on this. Nope. There we go. The first criteria is that this order block, NOB, must sweep must sweep liquidity to be even called an order block. From now on, you will not consider an order block to be an order block if it does not sweep liquidity. You can call it a propulsion block. It can be a vacuum block. It can be a whole bunch of other bullshit that ICT teaches, but you will not call it an order block, okay? So I'm going to ask you guys again, what does an order block need to do to be called an order block in your mind? Everyone say it.
Sweep liquidity.
Sweep liquidity.
If it doesn't, is it an order block?
No.
No.
What might it be?
Propulsion block?
Yeah,
Propulsion
propulsion
block.
block, vacuum block, this block, that block, whatever you want to call it, right? Mitigation block, whatever. An order block must sweep liquidity. 2, an order block must lead to displacement opposing the liquidity sweep. There's 2 components of displacement I need you to care about. The first one you guys already talked about. What was that?
Out of a range or area.
Fair value gap.
Fair value gap, right? Inefficiency, right?
Yeah.
FEG, imbalance, whatever you want to call it, okay? What's the second thing that displacement must have? It's the big S word that I always use. What confirms displacement? You can have an FEG, but what really confirms displacement? No wrong answers here. Just throw anything out.
I'm not talking about SMT, are you?
SMT is cool, but not SMT. SMT is cool. I like that. I like that response. I like how you're thinking. Because SMTs frame SMRs, so I like that. But what's the big S word that always saves us in our bias? Yusuf, I've probably said this to you 100 times.
Structure?
Structure. Market structure. More specifically, a market structure what? Shift. You can't have an order block, right? That's sweeping liquidity and leading to displacement without a market structure shift, right? After the liquidity sweep, right? Because that down close candle, if it's the area of institutional sponsorship, right? So, you know what? Can you guys see my screen?
Yeah.
I want to show you this. When I saw this, order blocks made a lot more sense to me conceptually. Oh God, this is gonna be hard to find, but it's gonna be worth it. I recommend following Alex Laz on Twitter. He's fantastic. Him and Tyler they have a Discord called Chroma. It's like very cutesy shit, but it's fantastic information. Yeah, see, it's all like very like aesthetic, but he has one post which is really fantastic. I'm gonna find it because it's worth it. This is decent, but there's a better one. This is decent, but there's a better one. If I can't find it, I'll just explain it. But the visual's nice. guys are probably recognizing some of this stuff in these,
Yeah.
but I'm looking specifically where he looks for the offset distribution of orders inside an order block with respect to time. It's just a really simple visual, but it does a perfect job of describing what I'm trying to say. Yeah, it might be completely irrelevant. Maybe I'm just wasting time, but if I can find it, I'll find it. If not, I can't. I'm gonna look for like one more minute. If I can't find it, then I can't find it. No, okay, I don't think I can find it. Irrespective, doesn't matter. Okay, whatever, fuck it. What I tried to find was showing how orders are being accumulated and reaccumulated within order block over time, right? So essentially, we need to see a shift in market structure, right, to confirm, right, the narrative that price has been offset accumulated here. This has been offset accumulation as a function of time, right? So more orders are being accumulated, right, as we trade lower until it plateaus, and then orders are being offsetly distributed, right, higher, like that. Does that make sense? So orders are accumulated and orders are distributed, and unless you see the market structure shift, the distribution of orders from this order block has not been filled, so it's not a qualified order block. Essentially, market structure shift is showing you that this is an institutionally sponsored area of price right here. Okay? That's all I'm trying to say. Yeah. And also, then, moving from that, what do you think is a key area of this order block? The mean threshold, right? Which you can see will give sensitivity even before market structure because it's showing you that there's institutional sponsorship here. However, let's now get into the rest of the conditions. So that's the second condition. The third condition is that an order block. Well, actually, Yusuf, me and you had this conversation. What do you think the third condition is?
Wait, I think it's in my my side notes. Hold on 1 second.
All right, find it. It's good for you to recall that.
I can't seem to find it.
Okay, no worries.
I can't find it right now. Yeah.
An order block. So this is let's call this let's just call this 3 criteria then. An order block is even better if it trades into an imbalance. I.E, the order block that engages a fair value gap, breaker block, mean threshold or CE of a wick, etc., is going to be a higher confluence order block. Again, when we're talking about offset accumulation and offset distribution, right? Think about how orders are being filled. Think about the internal logic of an order block, okay? This fair value gap has inefficiently priced buy-side liquidity, correct?
Yeah.
Mm-hmm.
As we move down into this order block or into this fair value gap, we are pricing what predominantly? Sells or buys?
Sell side.
Sell side liquidity is being priced into the market, restoring the efficiency paradigm, right? Net efficiency in the market looks like this. This is +1. Oh, I don't like that color. This is +1. +1. And this is -1, right? Net, this gives us 0 in this area because we've delivered buy side inefficiently. And now we're delivering the sell side inefficiently. So this gives us an area of balanced price in terms of the distribution of price, right? Net short, net long, buys being priced, sells being priced. Now, in addition to that, we also have the added knowledge of knowing that what is happening in these down close candles? Offset accumulation or offset distribution?
Accumulation.
So we're accumulating, right? Offset accumulating, net what positions, long or short?
Longs.
Well, repricing what?
Well, we're repricing the inefficiency.
Sell side liquidity, right?
Liquidity, yeah.
We're repricing sell side liquidity, so we're rebalancing an array, making this a balanced area of price that it doesn't need to return to. That protects you in this swing low, which is an intermediate swing low with one tally. We'll add one there, right? Efficiency paradigm, this is being repriced. This becomes net balanced. Price doesn't need to return to this swing low just through the market efficiency paradigm. Now we're also offset accumulating in what market conditions, bullish or bearish?
Bullish.
Okay, so that's another point for offset accumulation in bullish order flow. Once we get the market structure shift right here, right? This is now what? Offset accumulation or distribution?
That's distribution.
Distribution.
So now we are distributing higher. This candle right here is going to be defined as our propulsion block, right? The order block that engages the order block. However, this specific body, right, will act as support for price. So let's go into a lower time frame and see if that's true. Do you notice how we accumulate inside of this order block?
Yep.
So what do you think from what we know about market maker models is happening here? We have inefficiency, so we're restoring the inefficiency using a lower time frame. Market maker what model? What is this?
That's a market maker sell model.
Sell model reprices the inefficiency, making it net balanced, putting in a intermediate term low in the market. Then we distribute. What has to happen after distribution?
Accumulation again.
Accumulation.
Where is the accumulation occurring?
At
The order block.
That's
that
the
they-
point of institutional sponsorship, meaning institutions are accumulating orders inside of these down close candles, right?
Yeah.
Then they're offset distributing to break structure and push price higher. Then they're reaccumulating inside of this place where they had the most efficient order fills, right? Reaccumulation inside the order block. This is defined as a sysd, a change in the state of algorithmic delivery. There will be an SMT here with ES, most probably, or YM, right? Which we'll look for later. And then we distribute once again higher. But seeing just this in the market can tip the hat as to what is happening. Understanding that we have this, 4-hour sysd, which is a daily order block, right? Which has no reason to trade lower because has it met all of our conditions?
Yes.
So there's an internal logic. Do you see, have we talked about patterns once in this conversation?
Only when
No.
we said not to do them, yeah.
Right? Do you understand how the patterns don't mean anything? It's just patterns. Chart patterns are just nothing. You're not actually trading. You're just using patterns if you're a chart pattern trader. We use context. Price delivery books time and price first. So here is the context. There's offset accumulation, redistribution of price inside a time-based model, market maker sell model. Then we put in an intermediate term low, which is a price, and we expand away from it, breaking structure, reaccumulating inside the area of broken structure. This is an SMT with ES, by the way, right here. Reaccumulating inside the area that broke structure. Right? Can you guys see that SMT?
Yes. Yep.
Right? That's intentional. It's not random. Do you think I had any idea that was an SMT? Yes or no? Of course not, right? How could I have known, right? Unless I remembered, which I honestly didn't. It just makes sense from a narrative standpoint for this to be the accumulation, which is creating what kind of liquidity right here?
LR.
LR. So do you see how it all pieces together? Everything I've taught you is not independent. This is a full market maker, offset accumulation, offset distribution. What is it using for offset accumulation?
Order block.
Order block. That's order block theory. We're reinforcing order block theory now. We're using that PDA array for the source of offset accumulation. All of this is deliberately done, including the SMT at the highs, including the repricing of this inefficiency with these down close candles, and then the creation of this propulsion block. But all we have to know for now is that does it meet our 3 criteria? This is where we become pattern-like and we look for things on the chart. Does it meet our 3 criteria?
Yes.
What you'll notice is that these criteria are the quick and dirty way to account for time and price. Have you noticed that? Like, based on our conversation, if you just consider these criteria, you've now accounted for the 2 things above that are more important, which are the context, right? If you look for these three
Right.
things, you're now giving yourself a way to be a pattern trader who considers the most important part of the market, which is liquidity and time. Okay, fantastic. That's order blocks that are A+. Let's find a whole bunch of them on our chart and make sure we can reinforce this idea. I'm going to use a daily chart, 4 hour. Let's use a 4 hour chart so we can get some more order blocks that are A+. Okay. Do I need to keep this up? Maybe I'll take a screenshot and put it in our education chat for now. I'll put it in here for now, and then I'll transfer it later to the tab. Okay. So now you guys can look at that while we do this. Let's start down here, right? And let's find some A+ order blocks, okay? All right, and also, someone said this last thing, right? What was the other S word?
SMT.
Yeah.
SMT, yeah.
Right, and that's going to be located where? At the liquidity sweep, right?
Yep.
And that's because we know that SMT is signifying SMR in many cases, and the order block is the candle, right? There is no order block without a turtle soup. Does that make sense? Without a liquidity sweep, there is no order block. So unless you have a liquidity sweep or a turtle soup, you don't have an order block. You just have a down close candle. There needs to be offset accumulation and order pairing in the order block. It's literally in the name, right? Order block. Well, where rests, right? Orders in the market, guys. And let's use this order block right here. Again, we're going to not talk about chart patterns. We're just going to think about internal logic. Okay? What rests below this swing low?
Sell stops?
Sell stops. What is this candle called?
An order block?
An order block is the accumulation, right, of institutionally sponsored positions. What are they doing below this low?
They're soaking up the sell stops and buying
Order
positions.
pairing. So is this a real break of structure? I was talking about Willie with this earlier. Is this a real break of structure? Lower.
No.
This is an FBOS. And you'll see me talk about this. Why do I fade breaks of structure sometimes, right? Because you
Narrative.
see the context of this move, right? This is not a break of structure. What is the narrative? What happens right here? I don't have to look. I already know. What happens here? SMT.
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 Right? I don't have to look. You guys can go look at your charts. I already know. I don't need to look. But let's confirm it. January 24th, 2 a.m.
Check YM.
Uh-oh. Maybe I fucking capped too hard. Oh, there we go. Right? There's an SMT. There needs to be. For me, there's no internal logic to this net long position from institutional order flow if there is an SMT here. Because what does an SMT confirm?
SMR.
So what's the draw on liquidity? Use a 3 for the 4-hour chart, right? Use a 3-day look back, or maybe use a 3-week look back. So I'm gonna give you 3 weeks of price. Remember, this is our IPTA lesson. I'm gonna give you 3 weeks of price. Oh, well, I see a clear, obvious swing high, right?
Yep.
So this is the shift, the IPTA shift, right? You can call this a lower time frame or something akin to a quarterly shift. This is a smart money reversal. What is the look back? 60 days, right?
Yep.
Where is the most obvious fucking swing high in 60 days? Right here. Where is the most obvious rejection block in 60 days? Right here. Right? Okay, that's our target. There is an SMT here. We already know this. There has to be. Okay, so is this a real break of structure?
No.
No, it's a fake break of structure or a liquidity sweep. Fantastic. Condition 1 is met. This is a turtle soup, right? It's also a FBOS. Fantastic. Fake break of structure, turtle soup. This down close candle now becomes our order block. I am going to use these entire sets of down close candles. But Afiz, why are you cutting through this candle right here? What's the narrative again of this move? What is it trying to do? What are all these candles trying to do? What's the
Try
goal
to
of this move?
Take sell stops.
Yeah,
Order pair.
liquidate sell stops, right? Where is the inefficiency in the market?
That's your
Now
value.
we're- now we're combining shit, right? So let's go through our conditions again. Remember, have I talked about chart patterns once?
Nope.
But do you see how considering these things allows you to just look at chart patterns?
Yes.
But you shouldn't be happy with just thinking, oh, here's a chart pattern. You should think like this. Think algorithmically. Don't think like a retail trader who's seeing chart patterns. Sure, we have, what is this right here? What type of liquidity is this?
LRLR.
LRLR. We have all three conditions met. But do you see why these things are happening? Like there's narrative here. It's not just like, oh, fake breaker structure, which rebalanced this PDA array. Yeah, great. It did, right? It also rebalanced this PDA array. Great. But there's more going on here, right? Like, look, you see how we closed through this fair value gap right here? Is that bearish? Would you be like, oh, it's an inversion fair value gap, right? Do you see how the market intentionally does this? It induces shorts in the market. Look, we're closing through this inefficiency, right?
Yep.
So now you have two things that would make you want it to be short bias, right? Break a structure, inversion fair value gap. But what are we completely neglecting? The entire context we just talked about with this shift, right? To the IPTA 60-day look back. SMT, strong break of structure, reaccumulation, right? What is this now? This is the second phase distribution. Look, LRE is right here in this SMT, okay? Right? Smart money reversals happen right here. So you could take your lowest risk entry in the chart as a turtle soup. Then you have what in here?
First stage.
Yeah, this is what I teach you guys as your low risk entry. So you can use my model. This is your low risk entry, okay? Then what's this in here? Right here. This breaker. Second phase distribution. Time distortion, right? Still holds that same area. You notice how this area is the second phase distribution? This is just accumulation, right? So low risk entry. You could take your entry early right there or wait for the accumulation. Second phase, silver bullet. What happens after the silver bullet?
Distribution.
More or less than the first phase?
Way more.
So now, would it be crazy if I told you that this area here is going to be within the 1 to 1.5 standard deviations of this manipulation leg? Would you believe me?
Yeah.
Yeah, because what is the 1 to 1.5 region?
That's the silver bullet.
Oh my god. How could I have known? How could I have known? Do you see how I'm not using any chart patterns here? We didn't need to draw that deviation and be like, oh, here's the chart pattern for this reaccumulation, right? Do you see how it's already written? It's already showing you that. You just know it already, right? You know this is going to be your reaccumulation zone without ever having to draw it. You don't need the deviation projection here, do you? It's showing you exactly what's happening, right? And then where do we go? Where's the high of this price move? To the tick, right? So in this entire conversation, did we use any chart patterns really? Or did we just talk about order flow?
Mostly order flow.
Right? And we can use these three chart patterns to gauge our order flow. But at the same time, please recognize that I'm not just teaching you chart patterns. I will never do that. I'll never just sit here and give you a lesson on chart patterns. It's not important. This is what you need to understand. You need to be able to see that this is going to be the silver bullet reaccumulation zone without even needing to draw the chart pattern because you're looking at the delivery of this market maker model, right? 2 stages. First stage, second stage. SMT signifies the SMR. So then this deviation projection should be 1.5 right here, and the final terminus should be 4. And then you predict that all in advance, weeks and weeks ahead, right? Literally 2 weeks ahead, you know exactly where price is going. And it's all because this order block right in here, it's telling you what's happening right in here. So this fake break of structure, you're looking to be long off this. Okay, so are all conditions met here? Quickly. Sweep?
Yes.
Yes. Displacement?
Yes.
I see displacement, right?
Yep.
Let's make this a little bit less bright so we can draw in our market structure shift. Right? That's our market structure shift right here. Okay. I'm going to turn off these sessions too. It's really annoying me. There we go. Market structure shift right here. Secondary market structure shift right there. And then what else? Is there any inefficiencies in this leg?
Yes. Fair value gap.
Fair value gap right here. I see a immediate rebalance. That's a inefficiency. I see a, what is this called? Willie, what's this called?
BRD.
BRD.
Willie, do you see it now based on our conversation earlier?
Yeah.
RDRB.
Yeah.
So I see 1, 2, 3 internal rebalances and 1 fair value gap. I'm bullish, right? I'm seeing my conditions met. This is displacement. Okay? An OB is even better if it trades into an imbalance. Yep, 4-hour fair value gap right here, right? This is a breakaway gap. Does this meet the criteria for our breakaway gap? From the last lesson, putting it all together.
Yes.
Right? First candle, second candle, third candle. Displaces through this second candle, creating another fair value gap, right?
Yep.
So we can use this as a measuring gap, right? Look at this reaccumulation in 2.5. Look at 4 reaccumulating, right? That's measuring gap, not in theory, but we don't need to use it because we use these projections. But it's interesting nonetheless. Do you think there's an SMT down here, maybe? Should we check?
Probably, yeah.
All right, someone do it because I don't want to change charts.
What is,
Wednesday,
what is it?
17th of January, 10 a.m.
Checking right now.
Yep.
Yeah, it's there. It's big.
Yeah, of course. Right?
Yes, traded way lower.
We don't need to see that to know. That's why when I'm trading sometimes, I have this chart. But really, sometimes, honestly, guys, swear to God, if I see something like this, I'll just assume there's an SMT and then check later. Like, if this is a lower time frame and I see this is a 5-minute chart, my entry, right? I would just assume this is an SMT. Because you see the narrative of this move? I bet you ES comes into this low, doesn't it?
Yeah.
Even that low in
this gap, right?
Discount value.
Yeah. Right? Nasdaq has this breakaway gap. So does ES's third candle right here close above this second candle and create another fair value gap? Is there 2 fair value gaps created in this area on ES, boss?
Yeah, there is. It just traded into the lower one.
So it came all the way down into here. So this is definitely a breakaway gap now. Okay, perfect. So because they both created that, now you immediately know that for the rest of this delivery, this is going to be a breakaway gap. You know, until the buy side of the curve is liquidated, nothing's coming down here. Because ES also created 2 gaps and then traded lower into its breakaway gap, you already know that this is gonna go. This is gonna stay unfilled, right? You don't need anything else. This is your intermediate protected low. It's not even coming close to this low anymore. You're just longing for the rest of price delivery, which we did. Remember, all of January, we were like, yeah, we're longing up until these highs, or even higher highs. We're longing until all time highs. Yeah. So this is an A+ order block. Let's do a couple more. We'll get into breakers after, but this is good. Most people have no idea what the fuck order blocks are, by the way. You know what people think? Like, all right, this is an order block and nothing touched it, so I don't get a trade. That's what they say. Oh, this is an order block. Why? It's a down close candle before we broke structure. This is the order block, actually, because it's the context of this move. Right? Okay, let's find another one. Oh, that's a true month. I think I just deleted my indicator. Yes, true month. Okay, let's find another one. What about this right here? Go to order block. I would say yes.
Yeah.
Because it sweeps liquidity on ES on YM, right? SMT.
Yeah.
It also sweeps this internal low. This is still a low, right, in the market?
Yep.
So it sweeps liquidity, leads to an SMT, break structure with the fair value gap, trades into a higher time frame imbalance or same time frame imbalance. Yeah, it's the daily fair value gap right in here. You can see 1, 2, 3, 4 hour candles, right?
Yep.
Boom. Fantastic. A+ order block. Doesn't come into it, but it's still good to know. Still an A+ order block, right? What about this one, right? Oops, sorry. What about this one right here?
Yes.
Again, notice the bodies here. Do you think that's random, by the way?
Oof.
You see, it's like look at the bodies holding the order block. Notice how I'm drawing a body. I'm not drawing it to this wick. This wick is not important. It's not part of the narrative. It's just this body, right? Just that body to this body. That's all I have to care about, right? This low is the target. There is absolutely no reason to come into this low. What it will come into is this rejection block. As you guys know, I've given you this. I've given you this before. It's the PDA matrix. Where is it? somewhere in here I've given it to you guys, the PDA matrix. Maybe it's homework. I think it's homework. So you're going to go in here if you don't know what a rejection block is, and you're going to learn this order of PD arrays because it's very important to know how this forms. Do you see how rejection blocks form right below or above old highs or lows? You see that, right?
Yeah.
Rejection block, rejection block. Look at this. What is this right here? What is this line? A rejection block, right? 1, 2, 3, 4 wicks, right? What is the protected low in the market? It's this low, which is off what? This order block, right?
Correct.
My dog is having a dream in his sleep and kicking his feet. That was the cutest thing in the world. Okay, so order block. Let's grade it. Someone do it. Who else hasn't talked a lot? I haven't heard whose voice. I heard Kev's voice. Snake, are you here? Can you unmute your mic? I don't know if that's a yes or no. What about MJ? I'm hearing. Okay, I don't think you can talk. All right, whatever. We're gonna get Kev or Boss to do it again. All right, this time, Kev, you do it. Oh, actually, has Willie here? No, Willie. Oh yeah, Willie is here. Willie, you do it.
I'm here.
Yeah,
okay.
Willie. Sorry, your face is black. Like your screen is black, so I didn't even see it down there. Okay, you grade this order block for me, going through the criteria.
We trade into a Verwegep,
Okay, cool.
so that's 1.
Yep, nice. I'll mark it out. You just talk.
It leads to displacement.
Cool.
I don't really see a sweep of liquidity.
Yep, true. No sweep. Oh, yeah, there's internal sweep here. This is a lower time frame liquidity sweep, for example, an hourly chart, right? But you're right, on that time frame there is no liquidity sweep. Fair enough. So let's not give it 3 points. Let's give it 2 points. And then is there an SMT at that level? Boss? Yusuf, you're gonna be my SMT guy, all right? Well, we don't know.
I'll be the SMT guy.
Okay, you be the SMT guy. I don't know where Yusuf went.
So I just have to go grab it. I'm
Don't worry.
right.
Is there an SMT at this low? Tuesday, 9th of January, 2024.
I'll check right now.
You guys have to be my SMT guys because I don't want to keep switching my
Yeah, there is.
Oh, there is? Fantastic. So where's the SMT? ES comes into this gap?
Yeah.
Okay, fantastic. So it's still it's an A plus order block, not an A plus plus. All right, cool. Now let's talk about what areas I care about the order block. So now we've graded a few. Where I care, which areas of price I care about in NOB. 1 is going to be the open. 2 is going to be the mean threshold. That's it. That's all you got to know. Look at 2 places in the order block. That's all you care about. The entire body is way too fucking big. So if you're looking at an order block, look at 2 specific locations. Okay? The open. What do you notice about price reacting to this open? Right here.
Very sensitive.
Very sensitive, right?
Wake up, yeah.
Okay, fantastic. What about the mean threshold? Let's mark that out. You can use the wick if you want in this case, or the body. I don't care. What about that? What do you see about that? Well, look at that. If I use the bodies only. That must be random, eh?
Very, yeah.
What's that off by? 1 point? On a 4-hour chart, guys, this is off by 3 points on a 4-hour chart. But there is no algorithm, by the way. Okay, so the mean threshold, obviously, is it offering supports?
Yeah.
Yeah, crazy, right? That's insane, right? So, order block, mean threshold, and opener price I care about. Also, what is an order block off an order block called? This is
Propulsion.
Propulsion. So what is this called right here?
Propulsion block.
Look at the sensitivity again to this candle. Do you see how price comes in to this candle multiple times to rebalance? Even both these candles you could call a propulsion block. Do you see that? How this price area is then, and look at what's referred to. Seriously, look at the body. Do you see the open of this candle?
Yep.
Yep.
This is a 4-hour chart, guys. Look at the bodies holding on the 4-hour chart. Right? It's not random. That's a propulsion block. Order block engaging what? An order block. Yeah, that's a propulsion block. Okay, fantastic. Now we've recognized a couple of order blocks. Let's do one in the bearish case, and then we'll switch to breakers, and then we're done because don't want to go too late. Okay. This is a nice breaker. Again, an order block is only an order block until... I have to say this as well. And we'll talk about this in breakers. So a breaker block is when an order block fails, right? Someone tell me right now why an order block might fail. This is like the basis of ICT. Why might a PD array fail to support price? So go, let's do this chronologically. Is this an A+ order block? Yes or no?
No.
I would say yes.
That?
Let's go through it. Does it sweep liquidity?
Yes.
Yeah.
Does it lead to displacement?
Yes.
Does it tag a higher time frame PD array? Let's check. Yeah, this daily fair value gap.
Mm-hmm.
Okay. All right, and is there an SMT? I don't even care. Whatever. It's A+ at least, right?
Yeah.
Mhm.
So it's an A+ order block. Why might an A+ order... So just because you come up here and you see how it trades through, it doesn't mean like it wasn't a good order block. In fact, that's what makes it an A+ breaker, which we'll get to in a second. Why does an order block fail?
Higher time frame narrative?
Yeah, and what does that mean? Let's be very explicit with our words. Why, like, under what circumstance does any PD array fail? Why do PD arrays fail? There's one reason.
The draw.
Everyone say it
Yes.
with me.
Yes.
Why do PD arrays fail?
The draw. The draw got hit.
That's it.
Draw.
So
That's
we,
it.
We look for the flip to support
Yes.
the other side, the flip of the
A
candle.
PD, and I've said this to my students for literally probably 6 months straight. And I'm going to say it again. A PD array will only support price insofar as the draw on liquidity has not been met. Once the draw on liquidity has been met, we expect PD arrays to invert and offer support. Everyone put that in their notes. A PD array will only support price insofar as the draw on liquidity has not been met. Once the draw on liquidity has been met, we expect PD arrays to invert and offer support. This applies to order blocks, this applies to fair value gaps, and this predominantly applies to just those two, which have a known ICT, smart money concepts, inverse PD array. I don't think of a breaker block as a PD array. I think of it as an inverse PD array. I don't think as an inverse fair value gap as a PD array. What do you think? What's it called? What's the name of what did I just say?
IFVG.
Yeah, it's an inverse PD array. The reason why algorithm has internal logical consistency is because the inverse is true once what has been met?
The draw.
Because
The draw
what did I
liquidity.
say at the beginning matters the most? There's 3 things I care about.
Time, liquidity, and PDAs.
PDAs come last, right?
Mhm.
A draw on liquidity being met is which one of these two?
The second one.
Both. Is
Oh,
liquidity is
time and
liquidity?
price,
Do you just have like a random point of liquidity right here? If you did, you just have a y-axis, so we wouldn't see any of this. We would just see. All we would see is this, dude. This would be liquidity. Do you see that? No, of course not. You see
Yeah.
this. What is this axis?
That's time.
Time.
The only thing you're looking at in the chart, by the way, is time-based. People spend so much time obsessing over this. Who gives a fuck? Right now, if I condensed all of this to the same axis of time, what does it look like? It just looks like this. Right?
Gibberish.
Looks like shit.
Yeah.
The only thing you care about is time, guys. Time, then liquidity, then PD arrays. Liquidity, by definition, is time as well, but we can call it price. The y-axis is so insignificant that we never care what price we're trading at, do we? We care about what range we're trading in. And what is a dealing range defined by? Time.
Price over time.
Yeah, not just price. The only reason why this is discount here, right? This here is 50%, is because there is a time component. If not, then you just have price being here and price being there. There is no range. A range is created with time, not with price. Because if there was no price, this range just looked like all up close candles, and then down close candles, and then up close candles, and then down close candles, and up close candles. So sure, there'd be inefficiency in distribution, but where and when? Well, the reason why it happens here is because we have a fair value gap. And a fair value gap is not a price-based PD array, is it? What do you define a fair value gap as? A 3-candle pattern, right?
Yeah.
Every candle is what? More price or more time? By
More
definition.
time.
Because there doesn't have to be more price in a candle. Look here. Is there more price in these candles?
No.
No, it's the same price. But what is there?
Time.
Look at where price is accumulating. Is a price accumulating in time or in price?
In time.
Okay, so every time you think in your mind that you can forget about time being the most important thing, you should consider what we just looked at. Does price make any difference here? Is price doing anything for a day here from 10 a.m. till 10 a.m.? One full day of price action is right here. Did price do anything?
No.
But what did it do? It progressed the x-axis, which is time. And then once time has accumulated, right? This is called time distortion inside a PD array. What happens next? Price follows, right? Time,
Yes.
then price. Time, then what happens after? Price. Do you guys see that? Do you see how accumulations are time-based events? Not really price-based. I mean, yeah, sure, expansion leads to expansion, but what are we creating in this expansion? Why are we accumulating? Like, look at that. This is a great example. See how we're just accumulating inside of this 4-hour fair value gap?
Yep.
It's all time-based. We're just utilizing time to accumulate before we expand because we need to expand next. Look how clear IPTA market cycles are when you think of it like that. Expansion, consolidation in time, expansion. Retracement in time, manipulation, which is fake expansion. Then what? Reversal, right? Market structure shift. Reversal into what? What's this? Expansion higher, right? Reversal into expansion, into retracement, into reversal, right? Reversal into retracement, into a reversal, into expansion, into retracement, into reversal, right? And then consolidation, expansion. So it's all based in time. Sorry, I was super, super off topic, but it's important that you recognize this statement. A PD array will always fail when the draw on liquidity has been met because the draw on liquidity is the time-based system which price delivers to. Again, I could tell you right now, if I used, let's say this is the high in the market, right? What time chart is this?
4 hour.
I'm going to
That's
look
the
back
4
3
hour
weeks,
chart.
okay? Again, if they look back 3 weeks, 30 days. Where is the most obvious swing low in the past 30 days?
That giant fat
Yeah, this one, right?
thing, yeah.
Look at do you see how price rapidly expands through the 30-day low, right? 3 weeks, including, Sundays and Mondays, which I don't really count for IPTA, but that's just me. And then it starts to kind of reduce the amount of displacement it has. Where's the target? Right there, right? Now these are also targets, right? This is the 60-day look back, right?
Yep.
Boom, 60 bars. From this date, exactly 60 bars is what? This prominent swing low, right? And then this prominent swing low, which is just a few days after, 66 days, right? But look how aggressively we expand to our 3-week look back. 1 day, right? because it's time-based. Now let's do a look forward of 3 weeks from this point. Where does price bottom out? Look. 3 weeks, right?
Yep.
This is just the last manipulation. How do you know it's last manipulation? Look at the market cycle. Expansion, right? Consolidation. What is this last expansion actually then? Because it causes a what? SMT, which is going to be telling us it's a what?
SMR.
Yes, which is the definition of a manipulation. SMT is manipulation, right? So expansion, consolidation, expansion as a manipulation, and then boom, reversal, right? Consolidations can't lead to reversals, but expansions can, right? Expansion, reversal. Consolidation, manipulation, A, M, D, retrace, boom, full reversal right above this high, right? But it's all based in time. 20 days forward, 20 days backwards. This is what we're looking at. This SMT gives it away. Okay, so when does a PDA fail, guys?
After the DOL
It's been met.
Cool, fantastic. Now let's look at this breaker now. So now everyone knows what a breaker is, right? Do I need to go through like what the pattern is? It should be obvious based on the conversation we just had, right? A breaker is just an order block that fails. So if an order block is the last set of up close candles before I move down, what's a breaker?
a flip of that.
Yeah, the same candles, right?
And candles just flipped.
Yeah. And the reason why this order block fails is because the draw on liquidity has been met. Let's go to the daily chart, for example. Is there an SMT in here? Someone tell me.
I'll check for you.
I'm looking for an SMT specifically at this low, Yusuf. The 6 a.m. 6 a.m. low, Friday, December 15th.
On the 4 hour.
Yep.
December what?
15th. 6 a.m. low, Friday 15th. Should I pull it up? Of course.
There's an S&P.
Yeah, how did I know? Because you can see the reversal in order flow, right? So once you see this SMT, what do you know is going to fail? Are you going to short this fair value gap, guys?
No.
Is that, by the way, so this has nothing to do with chart patterns, does it? Because apparently this is a fair value gap, isn't it? A SIBI, right?
Yeah.
And apparently this is an A+ order block. Are we even considering the chart pattern right now?
No.
No, because ES came down and liquidated this low, right?
Mm-hmm.
This is a protected intermediate term low. Protected. Now we go up and we liquidate the high because we're going from an accumulation to a manipulation to a distribution to a reversal. A, M, D, X. You guys have heard that before?
Yep.
Accumulation, manipulation. This is NFP, I bet. Or this is some red folder event. What is this? Someone tell me what this is. What day is this?
I think it's... Let me check.
Whatever this is something that I care about. It's a high impact news day, obviously.
It's consumer confidence.
There we go. Consumer confidence, A, M, D, X. This wants to go lower. Don't get me wrong. The chart wants to go lower. Let's look at the daily chart, right? Look at the daily chart. Do you see how we come above this high? Actually, let's mark out the full fill of this fair value gap. You see how we fulfill that fair value gap and then fail to displace it? Let's look at the 1 hour chart for our displacement, right? There you go. Fulfill the fair value gap. Internal to what? What does internal go to?
External.
When we get the market structure below liquidity. Look at that. Look at this perfect market maker model, guys. Look, what's this called right in here?
Market shift.
Look.
Oh, that one? Fair value. Yeah.
Low risk entry. Boom. Look at the perfect symmetry of this market maker model, guys. Look at it. You can't make this up. It's perfect. Look. Where's the daily fair value gap? I already know there's going to be a daily PDA in here. Want to bet? Watch. Oh, who would have thought? Right? Right? It's literally right there, right?
Yep.
Do you see how it's all... there's nothing about candlestick patterns here, guys. There's no candlestick patterns. We haven't talked about a candlestick pattern. It's all narrative. Look, we knew there was a daily PDA right in here. We didn't have to look at it even. We knew there was an SMT formed at this low without even looking at the candlestick patterns. We knew there was an SMT formed at this high. We know it. Is there an SMT formed at the high?
Yes.
Of course.
Yeah.
Do I need to look? No. I don't need to. I already know. Nothing to do with candlestick patterns.
Yeah, it's there.
Yusuf,
It's there.
do I need to look?
I was
No.
confirmed.
Yusuf, I looked, guys. Don't worry, I looked.
I did look.
Do you see what I mean? Like, it's all hidden in plain sight. And it's not hidden in these candlesticks, guys. These candlesticks mean nothing, because if you're a pattern trader, are shorting this fair value gap. And then you're being like, whatever, I'm going to wait till OTE and then short this order block, right? Look at how the market fucking fools you into thinking you can go short here. Do you see that move lower? This is just inducement. The high and the target is this fulfill. And then we can go internal, back to external, creating what? What is all this? What is this entire move now?
LR.
LR, all the way down to what? The daily internal, which we already know without looking at the chart, is right here. External to internal. And we have a clear this is bearish accumulation in here. MDX. So actually in this move higher, right? They're accumulating shorts. Then this move lower is simply to distribute, to manipulate, rip against that, accumulate more shorts, and then actually give their expansion. Do you see that? This candle is nothing more than manipulation. And it's telling you that here. That's why we know we're going higher, right? Creating equal highs, ripping through them, then distributing all the way back down. This is a classic ABCD pattern. You guys have seen this when you're like retail traders, right? A, B, C, D, right? You wait for like something like this, like LR to be generated. You wait for this, like A, B, C, false breakdown, LR, boom, boom, right? How many times have you guys seen this in like market structure courses, right? Fake breakdown here, rebalance something, right? And then actually sweep that high again, right? This is like the bread and butter. You'll see guys who are like, oh yeah, this is liquidity. They'll be like, oh yeah, liquidity, internal liquidity. And then they'll be like this. Watch, I'm going to mark it out like them. Internal liquidity. This is your chotch right here. Right? You don't even know any of that shit. You already know that we're going to come higher. And you already know this PDA is going to fail based on just one simple thing. External to internal, right? This is the fair value gap. Notice how we don't fulfill it? We leave it. Look what we're leaving there above that high. See this actual order block we haven't tapped. It's in the daily as well. Then we tap it. There we go. And then we break down. So this is a breaker right here. A breaker is going to be the last set of closed candles before I move down. Draw and liquidity is met. Now we expect to offer support. Again, is this an A+ order block, guys?
Yes.
Yes. Look where price trades back into. What points did I tell you to consider of the order block?
Open and the mean threshold.
Yeah, well, that must be random. Right? So this move lower, right? What was it repricing?
Buy side inefficiency?
Yeah.
Or sell side inefficiency.
Sell side inefficiency. Yeah, right? Inefficiency here. Order block here. What's the protected low of this move?
It's that low that are repriced.
Yeah, and I was talking to Willie about this earlier. You need to look at structure like this. This low, right? Right here, breaks this high, correct?
Yep.
So this is a valid swing low because we put in a new high, okay? This is a new high, so this is a real low. Okay, now let's see where we put in another new high. So this low is qualified by this new high. High here, low, higher high. Now, in order for there to be another low, what do I need to see? A higher high, right?
Another thing high, yeah.
Okay. So let's see. Here's a low, and I get a higher high. Okay? So now, once I break through this low right here, right? This is my break of structure. This is where you would look for shorts, right? But the minute, right, we start to consider just that argument, that this is the new low that puts in the new high, you also have to consider the fact that is this area of the order block disrespected yet? Because this low effectively puts in this high as well, right? This is all intermediate term structure. So this is an intermediate term high, right? And this is a what?
That's a short-term high.
low. Short-term low.
Or
Right?
low.
Yeah,
low.
short-term low, right? This low puts in this high. But in reality, right, nothing has told you that this low that put in this high has been violated, has it?
No.
In fact, what are we doing? We're repricing inefficiency. That's why you have to consider higher time frame lows and highs, right? On the daily chart, you'll see this is really clear, much clearer, because what does that one candle do? What does it come into? I see a couple PDAs here.
Which candle again? Point to it.
This is the down close candle. On that.
Oh yes.
Right. So I see this tiny little imbalance here, volume imbalance. I also see this RDRB and order block. Right?
Yep.
Look at how bright. Look, this day. Look at the 4-hour chart. What does this do? This is where's the open of this candle, by the way?
Open is in the
top, right? Here.
yeah. Open, yeah.
Open, high, low, close. So realistically, what are we doing? Opening, offering what?
Buy side.
Then offering what?
Sell side.
The next day is offering what?
Buy side.
This looks like this, guys, on a lower time frame. I don't even need to show you. On the 4-hour, it looks like this. Opening. Okay. Where is it? Look at that. Right? You guys see that? How identical are these things? Look, I'm going to map this over this. Okay, just like that. Make it smaller. You see what I mean? Same shit, right? Opening,
Yep.
buy side, sell side, buy side. That's efficient. That's an inefficiency right in here. This part right here. Where's the only inefficiency in this? This is efficient. This is efficient. What's inefficient? Just here. Just there, right? In between those wicks. Notice how it's a wick. Right? Just there. That's the only inefficiency that exists. There you go. RDRB. What's holding? The CE of the RDRB, right?
Yep.
And we're tapping again. Is this an A+ order block? We just qualified it on the 4-hour chart, right? This is an A+ order block. So look how this RDRB mean threshold is the exact same thing as the mean threshold of this order block on the 4-hour. You think that's random? Look.
And it's also the first PDA in the bullish dealing range.
Yeah. Yeah, it is. So look. Here's the mean threshold. Here's the CE RDRB. And in this dealing range, exactly like Willie said, if you look at this dealing range, because this low, right, puts in, this high up here, correct? Here's a high in the market. Then we have a low. And it's only a qualified low once we put in a higher high, right? So this low puts in, this high and this high as well, right?
Yeah, I looked at the low a little bit lower because it's sweep liquidity.
This one right here?
No, one to the left, the low.
Yeah, this is a short-term low. But this...
No, to left.
Here. This one?
No.
Oh, here?
No, left. Yes. It's swept swing. And then...
Yep. So this low, right? If you look left... Well, yeah, obviously we break a high. So this low, for example, here, breaks some high over here, okay? So this would be a low, and this would be a high. Now, this is also a valid low once we put in a new high. You see how we put in a new high? So this low, right, liquidates some high over here. Now this low liquidates this high. Do you see that? Break structure. That's a new low. That's a new higher low, isn't it? Right? If you look at market structure like this. If you thought of market structure like this, right? Every time we break above this, we have a new low put in, right? That make sense? Or no?
Yep.
Okay. So you're right. This low puts in this high. And that is the swing low in the market, the intermediate term low, until this low puts in this high, right?
Yes.
And now there's no other swing low. I mean, there's this tiny little swing low in here, which puts in this high. But I don't consider this to be a low because it doesn't actually sweep much, does it?
Nope.
No.
It doesn't actually have any liquidity sweep, does it? Remember we
Yeah.
defined as a low, it needs to sweep liquidity? Look how this low sweep. This is an up close candle, so this is a liquidity sweep, right? That's why when we break down, we don't come near this low. We just come into the, like Willie said, the only PDA in discount, right?
Afeez, quick question. So when we look for market structure shifts, do we want to see them above real lows and highs, or fake ones? Like fake lows or highs, or like lows that haven't put in a new swing high?
Everything is a real low or high. So here's a good example. Okay. Here we go. Let's look at today's price action, all right? So you see this 15-minute market structure shift based on this short-term low, right?
Yep.
Let's just do the internal logic. First of all, always note where your higher time frame arrays are. Always. You'd be a fool not to. That's your higher time frame fair value. Let's go to the 50-minute chart. But notice how this comes perfectly into the CE?
Yeah.
But 50-minute chart. Let's do the same logic I just did. So where's the high in the market? I see a high right here, okay?
Yep.
These are all lower highs, okay? This is the highest high. This high, now you have a low. Now you have a high. Do we have a lower low? Yes, right? This low is lower than this low, isn't it?
Yes.
Okay, so now we have, let's just get rid of this one. Now we have, this is a high in the market, and this is a low. Now, let's draw this out. You have to be looking at market structure like this. It's not easy to do, but that's your range. Okay. Is this high, right, lower or higher than this high?
It's intermediate.
Yeah, it's a lower high. Well, we have bearish structure, so we're assuming lower highs, lower lows, right?
Yeah.
Well, this in here is a higher low. So this low is still the low in the market, correct? High,
Yeah.
low, lower high, not a lower low. So this is still the low, and this is still the high, right? This is not a valid high, is it? This is an intermediate term high, okay? Or it's a short term high. This high here puts in this low, which breaks structure right here. Do you see that?
Yep.
This high does not put in a low that breaks this low, does it?
No. Yep.
So this is the new and only intermediate term low. Short term high, short term low, short term high, short term low, whatever the fuck you want to call this. Chop, 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 right?
Yep.
Now, once we break above, so now we have it defined, right? This is our intermediate term high, intermediate term low. This low now puts in this high. Not any of these other lows. It's this low right here that puts in this high, believe it or not. But what Afeez, what about all this? Do any of these lows make a lower low than this?
No.
So we're in bearish structure here, right? Lower highs, lower lows. This high puts in this low, correct? This high doesn't put in any lower lows, does it?
No.
So this low is still the swing low in the market. Now this is a valid swing high, right? Lower high, but there's no lower low. So this is intermediate term structure or short term structure. Chopping. Once we break through this long term high right here, this is the one, not this one, this one. Why not this one? Because this one puts in a valid lower low. Do you see that?
Yep.
It was here and like this, and that would have been the structure, but we closed below here, so we have a new low, and this high put in the new low. Now we're reversing structure, so what puts in this high?
That swing low.
This
Swing low.
Okay, now price will come in to, as you can bet, the 50% of this range, probably. Yeah, there you go. See that? We use the bodies. Right? Comes into a discount of this range. Right? This is like Dave teaches FX structure type shit. But all you have to know is that this high, right, has been put in by this low. So this is the swing. Oh wait, no, what? It's this low. Whoops. Now this is a valid swing low. Okay, make sense? So once we reverse structure, we reverse structure, right, and we break above this high right here, what's the low that puts in this high?
The low that it's that low.
Now we have a new low, right?
Yep, that one.
Before, it was this low, because this low was the lowest low of the dealing range in bearish structure. Now we have a market structure shift. So this low put in that high, but because there was a higher high put in and a low here, we now have a shift in structure, which means we have a new swing low, right?
Yep.
Get rid of this. Get rid of this. Get rid of this. Okay, so now we have this low and this high. Now, what breaks this high, essentially? When do we break structure on this high? Okay. Once we break structure, we have this high here, right?
Yep.
What puts in this high?
It's the low before it.
This low, right?
That one. Yep, because that's the one. Yep.
This is the low that puts in the swing high. Before, right, so this low right here, right? Does this low put in a swing high, like here?
It does, but it doesn't break the structure of it.
So it's not. This is not a swing low. This is still a swing low. Notice how
it's still a swing low.
So yes, this is a what? Short-term low.
Right? Short-term low. Yeah.
Now we have
okay.
This.
That's what I was confused.
Yeah.
Okay, got it.
So now we have this low, which puts in a valid structural high, doesn't it?
Okay. Yep.
A valid structural high makes this the new low. Okay, low, high. Get rid of this one. Market comes down, puts in this low. Is this high breaking the structure?
That high does.
No, it doesn't. Right? Does this low break structure?
Oh, you meant that? Yeah, no, that one.
So
doesn't.
is this a valid swing low? Yeah, but what is it?
Yeah, but that low doesn't lead to a new swing high that breaks structure.
Short-term low, right?
Short-term low, yes.
Okay, cool. Once we come down, do we ever break? So now the question is, one question. What is the low that put in this high?
It's the
this
first.
Low. It's this one.
That low. Okay. Yeah.
Right. This here is no longer. So this is a low at one point in time. Sorry, this is a intermediate term low at one point in time, right?
Yeah.
But this low doesn't put in a higher high, does it?
No.
So then this low is not an intermediate term low. An intermediate term low puts in a higher high, which this low does.
Yep.
Right? You can even say it's this low. You can even say it's this low. Right? This low puts in a higher high, okay? Then we come down. God, it's so messy in here. This low puts in this high. That's a valid low in the market. But I would still prefer to use this one. And that's because this comes down. And does this sweep liquidity?
That low doesn't sweep liquidity.
This one does, though, right?
That one does, yep.
Because these are up close candles, yep. So this is a better low. Again, now we're combining kind of context here because it sweeps liquidity. Now once we break structure, we have this high. This is an intermediate term low. It sweeps liquidity. But this doesn't put in a higher high, does it? We come down. Do we break structure below this low?
Nope.
Honestly, dude, I don't even know if I would call this a low because does this really sweep liquidity? These are all up close candles.
Yeah.
I would call this the low.
Yeah, there's no swing low here for it to sweep.
Yeah, so I would call this the low. So do we break structure below this low? No. So what's it? A liquidity sweep. So now, what's the high? That's still in target. This high, right? It's just structure, right?
Yep.
We didn't close below this low, so we haven't shifted structure. So now we have a swing high and a swing low. Swing low is still preserved, isn't it?
Yes.
The body's still there, right? Okay.
Yep.
Now we put in a new low once we put in this new high. Right? Make sense?
Yep. Yep.
Structure is one of those things that's like pretty confusing. I always had a hard time doing this too, but doing it with dots helped me. Okay, so now does this low sweep liquidity?
That low does not.
Yeah, like here's some liquidity, right?
Yeah. Okay.
Right? Because there's this, right? This is down, then up, then down, essentially.
Down, then up, then down. Yeah,
right?
yeah.
So it's not great. It's not like a full on liquidity sweep, but it's decent. It sweeps out this double bottom essentially, right? Because remember, this is an open, high, low, close, right? So it sweeps. Now, does this low put in a new high?
Yes.
Where? There, right? Now, does this low sweep any liquidity? No.
No.
Right? But it leads to a new high. So you can call this maybe, if you want, like a weaker low. Have you ever heard like weak and high lows?
Yeah.
Like, or weak and strong lows? Weak lows won't sweep liquidity, right? Strong lows will. But we're not bearish until what low breaks now? This one if you want, or this one. This is going to be your short-term low. This is going to be your intermediate-term low, right? Both are valid. Which one's more valid?
Intermediate.
Right? But we use short-term lows all the time. But it's important to recognize that when you're looking at market structure shifts, for example, if you don't have narrative, like look at this 15-minute market structure right here. Was this really a market structure shift?
No.
Right? Because this low put in this high, right?
Yeah.
This low came down, look. Consolidating, and then we have a liquidity sweep below all of these lows, and then a break of structure. What's the high it's breaking? This high right up here, right?
Yep.
So now, this high put in, this low put in this new high. This is just internal. And then this is also coming into an hourly fair value gap and a 15-minute one. Look how both hold, right? And you want to know why this is so important? Look at the trade I took last night. Do you see that? It's the exact same place. Same trade. I targeted this hourly. I faded this fake breaker structure and I targeted this. Do you see this candle right here?
Yep.
This is the devil's mark candle. Scared of everything else? Look at the hourly chart. See how the hourly opens up without a wick? 4 a.m.?
Yep.
So then I used this 5-minute model right here, coming into here, seeing the SMT. Look, I'll show you. Seeing the SMT right here. Do you see that? SMT is right here. So let's go like that. And then I used the basic premise of structure to take this trade long. And I longed just all the way here. I think I longed it. Where did I long it? Where did I get in? I don't know where I got in. Maybe I might have got in on a 1-minute PDA. I don't know. I just knew that it was a devil's mark, so I knew what I was looking for. Yeah, it was right here. I got in right here. Right on this double bottom right here at this breaker. And then I targeted 2. Look at that. Perfect, right?
Yep,
and that's because we're using the same exact concept we just went over in like deep detail, which is just structure. On the 15-minute chart, right? This was clearly a candle open with no wick, right? So that's a devil's mark immediately. So my mind goes hourly candle, no wick, right? Current power of 3 move. What's the structure currently? Bullish or bearish?
Bullish.
We have a huge fucking bullish fair value gap right here, right? Okay, so structure is bullish. I see this devil's mark. I see the SMT form on the 5-minute, and I'm saying this break of structure lower here is nothing more than a fake break of structure to induce shorts. So I'm actively going to fade this as an inversion. Look at how this inversion is treated in the New York session open. Do you guys see that? Do you see the context here? Look at
Yep.
that. Right? You actively know that this fair value gap in here on the 15-minute, right in here, this is the manipulation for higher prices. And then price, as you can see, beautifully holds that inversion throughout all of this bullshit in the morning. Perfect. Higher prices, right? So that's like structure. And also then, so to go back to our lesson, right? In the morning, say you want a long, this is your hourly gap, right? I mean, what's our time frame alignment? 5-minute, correct?
Yep.
Yep.
All right, so then this is our breaker. All right, this is an A+ breaker. I would just use this candle right here. Breaker, and then what's this in here? Fair value gap. So this overlapping part right here is the unicorn. There you go. How is this an A+ breaker? Well, does this. So where's the order block? Right here, right?
Yep.
All conditions are obviously met here, right? I don't have to even look left. I already know that.
Yep.
For this order block. I mean, if you want, we can. But I already know that this is probably going to tag like some sort of hourly inefficiency of some sort. Let me go. Yeah, if I go left, there's something over there at all-time high. Or no, it's at all-time highs, isn't it? Yeah, so maybe there isn't anything.
Oh, that's actually above all-time highs.
Yeah. So it's not. So it's three conditions met. Liquidity sweep, market structure shift, displacement, right, and SMT, okay? All right, so what is this candle coming off of this order block, right? Go to the 5-minute. What is this up-close candle that engages the what? Look again, look at the levels. Look at this candle where it's situated. Where is it situated?
Right at the 50.
Yeah,
I mean,
so this is an A+ order block, or an A+ propulsion block, if you want to call it?
Yeah.
Yes. When we trade through it, because what has been met?
Draw.
Which is this swing low. Remember, which low is it? The intermediate term low created, right? Remember I said the intermediate term lows are the draw then when we flip? I think I was talking to Willie about this earlier, right? Remember I said the intermediate term low is the obvious swing low because this low puts in this high? This low is the target. Come and sweep it. Now we have this unicorn set up. Beautiful, go long. Target 2 standard deviations. Right? Target somewhere in this region. Okay, that's the lesson on break.